Hi, everyone. How's everyone doing? Hugo, Richard, Paul, how are you? How's it going? Ingmar, how are you? So, I have to admit I'm surprised how fast the dollar gave it back and the yen.
I even had Mark Chandler this morning write me personally, and he's like, wow.
About the dollar, bro?
Yeah.
How it gave it
That was
back.
the only thing you wrote to me. He's like, wow, because we were talking yesterday.
Yeah.
Mm-hmm.
I wouldn't have, I thought we might have one more low because of no divergences at the bottom on smaller time frames. It did the job on the daily, Blake, the Dixie. I mean, it did diverge up here.
Yeah, I'm gonna go ahead and I'm gonna shut up for a little bit, let you guys talk about things, and I've got a lot to say about the dollar coming up and where we're at and markets just in general. So I'm gonna let you and Ryan and I want you to go ahead and say your piece. So I'm gonna shut up for a little bit.
I'm crying, Dale. I'm crying.
All right. Huh?
I'm crying.
About what, bro?
Euro dollar.
Okay.
I'm not in it. And
All right.
I've been talking about it for how long?
A few months. That you thought when everyone else was saying that why would and so there you go. There's a week it's having. Nice week. Hard to sell, hard to chase. What are you doing with a trade like that, Brian? You just have to sit on your hands for a while, or maybe let the first move happen and then look for some retrace to get in?
Yeah, you kick the dog. You slam a few doors. I think I'm not one. I hate hope. I don't do hope trades, but this is one time I'm edging towards a bit of hope that the ECB tomorrow maybe knock back these expectations, and it gives me a dip to get on.
Well, aren't rates over zero for the first time in many years, which is something else you said could happen?
Yeah, well, the rates or the expectations are ticking up. The money market rates we watch a lot. As I said, they can be a bit flaky. The last print was pricing 10 pips of hikes by September this year and 25 by December. Now it's gone to 10 pips by July this year. So they're jumping and finally Euro's reacting, but I think this is still a dollar story more than a euro story, because it's all the dollar at the moment that's moving. The euro crosses aren't doing anything. Euro sterling isn't doing anything. There's no narrowing of the central bank divergence there between the ECB and the BOE. Euro yen isn't moving. A lot of the main crosses for the euro aren't moving. So it still tells me that this is more of a dollar move than anything else, which of course means that perhaps we're still not properly pricing the ECB yet and those expectations. So that could mean the ECB tomorrow knock euro dollar back. But it also means that if we're not really pricing it yet, when we do really price it, this is just the start.
Right. Yeah, just the start is correct. So, when you look at weeklies, this still, now we're back over the 61.8 level from the rally that we had in 2020. So, it was trying to hold it, puked, and then, here we go.
But not even close to the 38.2 of the drop from last year.
Yeah. And, I'm not that impressed with, I know silver was strong yesterday and gave plenty of it back. I'm really, looks like it could go again, but it doesn't seem to have the same kind of strength that euro and cable have, the metals.
Well, the 200 and the 50 DMA are converging. They're going to be a big test.
In what, silver?
I'm with you. Yeah, I'm with you. I think I'm very bullish, but I think we probably have one more
flush
lower. But yeah,
Okay, so the 50-day and 200 are converging on the
Actually,
day,
no. What was I looking
the
at?
weekly? Okay, 4 hour.
I can't remember. I was looking at a chart here just an hour ago, but
Maybe
I can't
this
remember
is
what it
it.
was.
4 hour. They're
Oh,
starting to
maybe I was looking
convert.
at the 4 hour chart. Yeah.
See, I know I
I
could
can't
find
remember.
it.
There you go.
Yeah.
Yeah. Anyway,
right.
we'll see. We'll see. I'm still not convinced yet.
Okay. And there must have been just some OPEC news now. Crude is just
Well,
spiking.
they confirmed they're going to be increasing 400,000 barrels per day production, the OPEC, and we're still just lunging ahead. I think there's so many people who want to short this, and if I'm not mistaken, the futures curve is in backwardation now, right? So it's actually beneficial to be short. Even if the price doesn't change, you make money if you short these ETFs, and that basically play the futures. So it seems to be a simple way, but it's not simple. Shorts get burned all the time now.
Okay, and S&P's got above this 45.50 level. I don't know if it's going to mean anything, but I would say from maybe a week ago, I wasn't sure this could happen. I thought we'd get one more low before this happened. So I'm out of step. And when I'm out of step, I just kind of 91.40, Jay's is saying. I don't do much. So what I am looking at is maybe if we do get a pullback and NASDAQ is stronger than S&P's today, that the Aussie is the most risk on, risk off sensitive. It's almost a lower beta way of trading the S&Ps. And when you look at a lot of things, they're all kind of doing the same thing. I mean, when the S&Ps were going down, so was gold, so was the euro. And then when the S&Ps turned, that's, we got the turn in the euro. And the gold bottomed and is trying to rally. So, it's just a matter of relative strength, of magnitude, but it seems like the whole market is just one market and there's not a lot of differentiation. Do you know what I mean?
Yeah.
Everything kind of goes up together, everything goes down together, just to different degrees.
Yeah.
True.
Yeah.
I get
anyway,
what you're saying, about feeling the market. It's important, isn't it? It's important, and you've got to feel. I liken it to the film The Matrix, being able to see the Matrix. Sometimes you don't see the Matrix, and you're not sure what you're doing, and you're not sure what's going on. Other times you see the picture clearly. And you're right. When you get in those moments when you don't see the picture clearly, you sit on your hands a bit and you wait to see what happens.
Yeah.
Yeah. Well, let's see. Equities are rallying, and I thought they would have been sold more. Every rally was being sold for a while. If you look at the S&P, we're now very close to the 61.8 from the January high. So the January low, so 48.20 was a high and 42.20 something was a low. We're getting to the 61.8, which is I think 45.90 something. So around the 4600 area, I think is probably going to be a good risk reward, but like this market, you try shorting it, it's very difficult. So I'm not doing it. What was I going to say? Oh yeah, did you guys hear today the US debt surpassed 30 trillion? So that's another big
milestone,
landmark milestone. Yeah. And also we had Eurozone CPI. It's probably one of the reasons why the euro is rallying. Came in at 5.1% year on year. That's from expected was 4.4, and core CPI 2.3, if I'm not mistaken. But anyway, it's like, and then the projections now that they have are basically, they've constantly had inflation coming back lower the next year. Even now, their projection, basically with the CPI coming back lower, it's still going to be around 2%. So this is their threshold for actually taking action. So I think that the market's probably realizing that, okay, we got the ECB tomorrow. you might get something out of them. It makes sense because inflation is actually not transitory, and they're going to have to change the tune at some point and bite the bullet and say, okay, maybe this is going to last a little bit longer, which means that they might have to take some action as well. I'm not saying they're going to do what the Fed is doing, but a move from a market pricing the ECB being a complete dove forever to something less dovish, I think is going to move the euro. And I've said from day one this year, I think the year to this year is to be long the euro. And I think this is the start of the move.
And I have to say, that's been a great call. Both you and Brian have both said that since the beginning of the year.
Yeah, but he copied me.
Well, you guys are both early, so let's just put it that way.
I'm always early.
Who stepped into the euro last week in the face of death, near death? I'm just kidding. The thing is,
major trend line was great, Blake. And
thank you. No, I'm just saying that was it's weird. And I was telling this to who was I telling to just 2 days ago? I was talking to somebody and they're like, man, great pickup on the euro. And I'm like, it's those trades that make your stomach turn initially, but I'd planned that trade for the last several months. I mean, if you've been listening here on the F.A.C.E webinar, just the free webinar, not even the morning edge, if you've been listening here the last few months, you've known I've been wanting to buy the euro down in the 111s. So, as we got down there, I did it. It just, that first day or two, it's the stomach churning that you get when that happens. Right. So, I mean, that's the thing. It's those trades are tough. I mean, I'm sure Ryan and Stelios, you guys could comment on how much when like you're going counter trend, it's really a place that you want to do it, and it's some of the best trades end up being the ones that are that turn your stomach for a couple of days, right?
Oh yeah, and who was it? Paul Tudor Jones. He said, all these people talk about riding the trend and follow the trend. He said, I've made my biggest trades at the turning points. Yeah. So I think at the end of the day, it depends on your style of trading. And like you said, Blake, so accurately, this is, sometimes it makes your stomach and it makes me want to vomit, but that's usually when you have the right trade on. But, you have to take some risk. And as I said before, it depends on your trading style.
Yeah. I mean, some people end up getting John G'd in situations like that too. They end up chasing these trends lower and then boom, it's like right in their face. And they wonder what the hell happened is they were chasing the market trying to trend trade and chasing the market lower, but they're not looking at, the bigger picture. And that's the problem with a lot of people.
It's all about having a plan. If you've got a plan to fight a trend. People say, you shouldn't pick tops and bottoms. Well, you can do if you've got a good reason to, and you manage your risk when doing so. If you're just buying on a whim because something's fallen X amount of pips and you think, oh, that's enough, I'm just going to buy it. Well, that's not a plan. If you've got a proper plan where you think, right, this may be near the bottom of the trend, I'm going to try it. Here's where I'm wrong. And you manage your risk and you know what you're doing, then you shouldn't have any stomach churning days because you've planned that in advance.
So, speaking of, let's just talk a little drives. Well, let's talk a little bit about the euro really quick. We do have the ECB tomorrow, and I heard your commentary earlier, Ryan and Stelios. I wasn't sure if you mentioned anything about the ECB, but I want to talk a little bit about this because I actually, if you guys, are ForexAnalytix subscribe, I'm going to just kind of give you guys a little peek of what we do here at ForexAnalytix, just so you understand. Here, this is the chat room, right? And I'm going to just share with you because, obviously we've been talking about the euro. I took all my euro dollar longs off and the pattern in play as well. And you can see in the trades room, discussing, positions, where we're getting out and, exiting and everything else. So this is where this is the chat room, this is your general chat room. You got your trades room, you got the Flowonomics or the Forex Flow Room, which is more of the macro chat room, if you will, news and research.
So quickly, we've got the ADP dropping in about
5 seconds. Yeah.
Oh shoot. Okay. Thank you. We'll come back and revisit that. Thank you so much. I forgot it's Wednesday.
Oh, what? Minus 301K.
Minus.
Whoa.
Is that?
You know what? You have to buy the dollar on that.
This has been warned. This has been warned the last week or so.
Yeah,
so
the Fed,
the virus. Fed have come out and said it.
Yeah.
They have been preparing it. Yep. Yep. So I think you buy the dollar on this move, by the way. Matter of fact, I might be doing that here very shortly. I think you have to buy the dollar on that. I'm just saying, now, speaking of which, let's talk a little bit about the dollar. I actually just sold my euro this morning. I have exited my euro longs because we are at the underside of this trend line. Do I think the euro can go higher? Sure. I actually have. I've actually still have some euro longs against some crosses that I'm playing. So if the ECB plays nice tomorrow, I can still benefit from that. But I am taking this off. This is a big move for the currency market. If you think currencies over the course of a couple of days, we're up nearly 2% in the euro. That's a big move. By anybody's standards. So the reason why I want to mention that is because I have taken it off, and you can see it in the in the patterns in play. And
this is what you've been hoping for about 4 years, and maybe this is the prelude of what we have for 2022 out of the box, that we're getting more volatility and larger moves.
Yeah. And we are, and we're going to be getting, it's going to continue. And that's the great thing about central bank activity and expectations are now starting to move around, is that we are going to get increased volatility, not only in currencies, but in every market. Now, speaking of other markets, let's talk about the S&P and where we're at with other markets, because look, we've had a 10% rise in the S&P. Well, in equity markets in general from the lows. We're almost 9% in the S&P. NASDAQ has been I believe, 11% move higher in the NASDAQ from the lows. The Dow is also a 7% move from the lows, and we're approaching some pretty key resistances. As I talked about on the trade-off with the Australian Pepperstone brokerage firm last night, yesterday we moved it a day early, but they did a day early show, and I talked about the S&P here, and this is a level where you probably want to be fading the market. Let's not forget, guys, and I'm going to be very specific here about central banks. We are raising rates and reducing liquidity. You've heard for 13, 14 years. You've heard the bullish argument. Hey guys, the party's still going. There's still a punch bowl, and everybody, the Fed and every other central bank is providing liquidity, and the party's still going. Well, guess what? Party's over, folks. Party is over. Punch bowl's being removed. It's late. It's like 4:00 in the morning, and we have people that are still passed out, hung over in the house. The party's over.
I thought your buddy left.
Yeah, people have left. They left you. They left you. You're sitting on the front lawn, half naked, missing a shoe, hung over on the front lawn. And the thing is that is going to create a lot of volatility as there is, the liquidity is being removed from the markets. Just keep that in mind, guys. It's not. I'm not going to sit here and tell you that the S&P is going to 2,000. No, but we are. This is the point in the markets where after a, literally 600% move from the lows post financial crisis, we are going to get a consolidation, and we are going to get some volatility here. And it's probably going to look something like this as we consolidate for the next year or two, as the Fed and ECB and Bank of England and RBA and RBNZ. RBNZ is priced in The market's priced in 7 rate hikes for the RBNZ. 7.
Yeah.
The punch bowl is gone. Do you guys understand that? So just, you guys got to be really careful here chasing the markets higher. And I'm going to tell you right now, just looking at the S&P, we are up against a 618 retracement. You got the NASDAQ also up against a 50% retracement into the resistance zone.
Bearish, yeah.
Dow also rallying right into the 618, a big resistance zone as far as I'm concerned. And the markets have been rallying the last 3 days on decreasing volume for 3 or 4 days. So put all that together, and I doubt you want to be chasing markets up at these levels. Now, does that mean that like I said, we're going to have a 30% decline from current levels? No, but I think this is a two-way market now. This is a two-way market. You're going to see this. Oh, here, I'll just continue on the drawing for a while. This, and great. Look, we're traders, guys. This is what we pray for. This is what we want. So and I'm not saying that we can't go to all-time highs. I mean, shoot,
people are trying to decide between buying the dips and selling the rips, Blake. Why don't you just do both and trade?
Yeah.
How about that?
True.
You don't have to be in a camp and say, well, I'm buying the dip or I'm selling the rip. Why not do both at important levels?
True. I mean, that's a great point. I want to, I was talking to Chris Weston last night about, central banks, and he's like, man, there's some peak hawkishness going on. And I'm like, yeah, you got to be a little careful with, people talking about peak anything, because, just last week, if you don't recall, people were talking about peak hawkishness in the Fed and, ahead of the FOMC. Post FOMC, don't forget, the dollar ripped. Right now, we've come down since then. Obviously, I was with a lot of you guys selling the dollar a couple of days later, but this is post FOMC, and the market continued to rally. Following it, I don't know if we're at peak hawkishness in central banks, but I think you take like the RBNZ that you're pricing in 7 rate hikes this year in 2022. He made that point, and I'm like, yeah, that's ridiculous. And it's funny, or I say funny, but what's also crazy is you take like the Kiwi, which just completed an inverted head and shoulder pattern. We're struggling here at the underside of this trend line. K-Man, who I don't know if he's here this morning, but he was we were in the chat room this morning, really posted the charts of the Kiwi right at the same time. You can see it right here. Oops, let's go over to the general chat room. Scroll back a little bit. You can see this is all since I got up this morning, right about somewhere around here. That's all the charts and chatting that's been going on in the last hour. Here, guy, right about here, K-Man said, he was talking about the Kiwi, coming into resistance. And I'm like, yeah, I was just going to post the same thing, as we're coming into this big resistance level. But you take like the Kiwi that's just completed a pattern right up into resistance, underside of this broken channel. This is a setup to be short. And especially if you think about like the RBNZ, and what expectations are, shoot, that's a good risk reward to be on the short side here. You're very, very limited risk, or manageable risk. Let's put it that way. It's not limited, it's manageable,
But the RBNZ, they've been priced in for hikes for a while. They were one of the first to start hiking. But then what do we get last night? We get RBA's low throwing in the towel on 2024, complete towel throw on 2024. I've been saying that it was a load of rubbish, them saying they're not going to hike till 2024. Well, last night he came out and pretty much admitted it, that we could hike this year, and there may be conditions where we hike this year. A complete 180. like all the others have done, you know. So now we're looking for the expectations of the RBA, how that's going to get priced. It's already started to be priced well before he said that.
Yeah.
But again, here we go, another central bank changing the language. They're all doing it, and they're all going to do it. Whether ECB does it tomorrow, next month, or the month after, it's coming. It's just how the market's going to trade that and when it's going to.
But you know, the good news is, again, you know, whether it's you know, central banks are you know, changing their language, they're shifting, they're moving, and that is creating volatility for all of us. And that's, you know, this is a trader's market. This is not the, I actually really worry about like my, you know, my kids and the next generation. I really, you know, I wouldn't be surprised if we have kind of a Japanese lost decade, you know, or two in equities. Not saying that we're not going to be, you know, moving higher. I'm just more worried that the markets, the trajectory that we've seen here, the 600% return from those lows are not going to be seen moving forward. I kind of feel like we're going to be doing something like this. You know, well, I'm getting a little crazy here. I have a feeling we're going to be doing something like this for the next 10 years, something like that, right? And it's not going to be pretty. It's not going to be easy for investors, but it's going to be good for us. You know what I'm saying? I just think that's, you know, that's like the 10-year trajectory for equities. If you really ask me, we're going to, again, it was a 13-year party. And if you partied for 13 years straight, you're going to have a hell of a hangover, right? So ride the curve, said gold bugs know that pattern. Yeah.
I think it will be
Stelios does firsthand, right, Stel? Huh?
I think it will be depend on how much the central banks go back at some point to a accommodative policy, which they will. The question is, when will they go back, and for how, you know, how aggressively?
Yeah,
if that happens, you know, inflation itself, just inflation is going to bring everything higher again.
Right. And well, and then this is the fear, right, with the inflationary pressures. And one of the reasons why I'm really, you know, very constructively long the Aussie, and why I want to stay long, if you know, for those keep and count, I, you know, sold my euro today, but I kept my Aussie. Why? Because I am really actually very bullish the Aussie dollar right now. And so that's, you know, that's the thing. You know, one of the things that I'm thinking about right here is just, you know, how far can the Aussie go with you know, bullish sentiment, right? So hey, any last comments before Joe Perry comes back? And for those of you that don't know, Joe has been you know, with us for a long time. You know, he was with us for a long time, and he left us to go to forex.com. Dang it.
Yeah.
Are you going to give him a hard time? Huh?
What's up, guys?
Dude, I'm going to give you a hard time. Joe Perry coming on our webinar after leaving us for forex.com for Gain Capital, or whoever the hell you guys are anymore. What's up with that, Joe?
It's StoneX now.
Oh, yeah, it's whatever.
Hey, Joe.
Did you say donuts?
Hey, Dale.
How are you?
How's it going, Joe? Good to see you, man.
Things are going well.
Yeah. So
what's very passionate this morning? Good job.
Well, yeah. Well, you know, we're just sitting there looking at the markets, and I mean, you know, what do you make of this craziness? And by the way, I'm not going to take away from your
Interview.
Dale's interview with you. But I want to say, you know, I wanted to ask you, how do you feel about this volatility we're seeing in the markets? It's nice, it's refreshing, great. Isn't it?
Yeah, finally, right? I mean, after all those years, the last couple of years, we've just been kind of moving in ranges, and now we're finally seeing some volatility. That's pretty nice.
It is nice. I'll give it that. So, well, it's good to hear your voice. I hope everything's well with you and your family. How the kids doing?
Everybody's doing well. Everybody's good.
Good. All right. Well, that's great. And before I go and I'll check out and let Dale come in and talk to Joe real quick. Joe, in case you missed it, I don't know if you saw my tweet yesterday. You know, Matt, who was in our chat room for many years, he was traveling around the country.
I saw that.
Yeah, he stopped in, and you know, Joe met Matt. Matter of fact, let me see. I might have a picture here.
I saw that was awesome that he came.
Yeah,
He's just traveling around the country. That's nice.
Yeah, well, he, you know, he did pretty well trading, and I think he got to a point where he just wanted to know what the meaning of life was.
Trading.
Let me see if this is a picture.
That's
Are
all
you in
life
there?
is. It's
Joe?
trading.
No, you're not in there. I think we met up with you a little bit later that day, but yeah, there's Matt right there, and JT and Chi, and a couple other guys that have been in our community in you know, years past, and that's us in New York City. And Joe, you must have. I know I saw you that trip.
Yeah.
Your eyes are, I think, look at your eyes, man. They're white. No wonder you're a great trader. You have X-ray vision. Look at that.
Yeah, I guess I do, huh?
Laser
Yeah.
eyes. Blake was a laser eye.
Yeah. Anyway, so just the thing. Yeah, Joe. What was I going to say? Matt was here visiting, and it was really cool to see him. Stayed the night over at the house. Made him dinner, and I actually made him dinner and breakfast the next day on Monday.
Oh, that's awesome.
Yeah. So anyway, and it was a really nice visit.
See you tomorrow morning, buddy.
All right. Yeah. Hey, you guys all have a good one. I'm gonna let.
I'm coming over for breakfast. But.
Oh yeah. Hey man, I grilled up some good. I made some great omelets for him. So you know. Anyway, you guys have Joe. Have a good one. Good to see you. Good to hear you. And we'll talk to you soon.
All right,
Joe,
later, Blake.
Joe's back in the rotation, Blake. Or not back. He's in it.
Bring him in.
Yeah. Hey, Joe.
Hey, how's it going, Dale?
Why don't you grab the screen, buddy? And, you know, let's see what you're paying attention to. Happy New Year. I know it's February, but Happy New Year to you.
Let's see.
It's a great year for you.
Can you see my screen?
Not yet.
Not yet.
I see your name.
Hold on. You cannot start video because the host has stopped it. Wait.
Oh, here, let me do something. I'll grab it and then I'll stop sharing and then now try it. Try it now, Joe.
Huh. Still have the same thing.
I wonder if Blake.
Oh wait, let me try this. Hold on one second.
All right.
What do I need to do something?
Joe's having a tough time sharing his screen.
How's that?
You're okay.
Hey, correlations.
Thanks, Blake.
Yeah.
All right. Nice presentation. Okay, so looks like you prepared something for us. Take it away, bro.
Yeah.
Welcome, Joe.
Thanks. It was interesting when you were talking before. You said that everything seems to be moving together as of late. And really, I look at correlations a lot, and from what I could tell, things really haven't been. Wait, where's my slideshow?
So you see differentiation in some of the markets.
Yeah, in the short term, it does look that way, but in the longer term, it really hasn't. So what I was going to do is just go over some correlations and talk about it a little bit, and see what is related right now and what is not. So maybe we could just go through some of them. I have some examples. I first have to give a disclaimer, just to show that I'm not giving any trading advice, of course.
Okay.
So there it is.
It's all educational. It's all education.
It's all educational.
Okay.
So what I wanted to do is just talk about maybe what a correlation is, and then what a correlation coefficient is, because that's how you measure it. And then how are they used? We'll go over examples and then maybe some tips on it, some trading tips. I wanted to try to make my screen bigger. but I'm not sure how to do that. Is that right? Oh, there we go. Okay. That's what I wanted to do. All right. So correlations, right? So in finance, it's a statistic that measures the degree to which two securities move in relation to each other. Okay. So the important thing to look at when you're looking at correlations is we're looking for direction, right? Not magnitude. You're not going to see Bitcoin move 10% and then, well, you could. I mean, you're not necessarily looking for magnitude, but if Bitcoin moves 10%, you may not see S&Ps move 10%, right? But they may be moving in the same direction. If you have a reading of 1.0, it's a perfect positive correlation, right? And that means that they're moving together 100% of the time. And a rating of -1 is a perfect negative correlation, which means that they're moving in opposite directions 100% of the time. And when you're watching these correlations, they fall in and out of favor. So although they may hold on average, you have to watch and make sure that they're not turning and falling out of favor. So the way that we measure correlation is using a correlation coefficient, okay? And this is a statistical measure of the strength of the relationship between the relative movement of two variables, which in this case is two instruments, whether they're currencies, fixed income, Bitcoin. You could use this for anything, and the strength of the relationship varies. So what you're looking for when you're looking at the correlation coefficient is readings between -0.8. I'm sorry, you're looking for readings below -0.8, or you're looking for readings above plus 0.80. So
Yeah.
if anything in between there that won't help you, because these are considered below -0.8 or above 0.8, positive 0.8 are considered
Yeah.
strong, right?
Yeah, they're kind of at the hip. They're joined at the hip.
Yeah.
Okay.
And the best part about it is, let me just show you something really quick, is that you don't have to know what the formula is, because I know that you guys and a lot of other people use TradingView. So if you're looking for a correlation coefficient, you could just go up and it's in the indicators up here, and you can just type in correlation coefficient and then type in your symbol that you want to have the correlation coefficient with. Google, it defaults to Google, but if you're looking for the, let's just say we're looking for the E-minis, right? Then you put apply, and it comes up on the bottom. So right now in a daily time frame, the dollar and the S&P are not correlated. But I know, as you were saying, things lately have been moving. In this case, it would be opposite directions. This is the daily time frame. If you go down to a 4-hour, look at it right here, -0.89. So this is statistically relevant. So this, you could say that, hey, I cannot trade the DXY because I don't have access to it, but I do have access to the S&Ps. Yeah. So you can use this and say, if you see the dollar start moving lower, there's a possibility, given that
S&P is a rally.
Yes, exactly.
It's like the old days, what we saw this week, Joe, kind of, risk on, because there was a long time period where, well, we haven't had a lot of dollar weakness, but it's the closest I've seen everything move together this week. It's almost like they think the Fed's going to change course.
Yeah,
we know they're,
It's great to see. It's great to see when you have things like this. Like you said, the good old days when algorithms weren't around and people traded based a lot more on these. People, the algorithms will front run these sometimes now because they know that people are looking at them.
Those bastards.
Yeah, I know. I can't say. Yeah, I know. They really are, right?
Yeah.
So to use a correlation coefficient, there's really two ways to use it. you can compare it to a benchmark. So as I was saying, so for example, I don't have access to the DXY, and in the US, I don't think a lot of trading FX trading platforms have that because it's an index. So I don't think you can use it as an FX, but you can use it to trade the Aussie if there's a high correlation. So you can basically look at use it as a benchmark, the DXY. And the other ways you could use it as diversification, such as crude oil and the dollar Norwegian krone. And the Norwegian krone, they have a strong positive correlation. So if you wanted to diversify it, you could buy crude and buy the dollar Norwegian krone, or sell the krone in that instance. So you can use it for diversification. So let me just get into some examples we'll look at now. And I did these yesterday, so these are pretty current. So the biggest one that you'll always see that moves in opposite directions is the euro versus the DXY on the daily time frame. You could see that the correlation is negative 0.99. And you could see that going back, this is a daily time frame, that it's been here for a long time. This correlation is held. So that's one you could almost always count on, right?
You can, yes.
Because the euro makes up 58%, I think, of the DXY. So
it's
that's
a mirror image. Yeah,
exactly. Yeah. And here's the shorter time frame. Okay, you could see it's negative 0.96. This is just a 60-minute time frame. So even on the shorter time frames, this one's holds, and that's good. That's something to look for. Now, the Aussie, on the other hand, falls in and out of favor. Right now, if you're trading, this is an example where you can use the Aussie if you don't have access to the DXY. So if you see the DXY start to move, there's a good chance that the Aussie will move in the opposite direction because there is a strong negative correlation between the two. It's negative 0.92. We see here, I mean, it was positive during December. You could see that how it falls in and out of favor, and that's something you have to pay attention to. You have to find the turning points and find out when it's.
You see anything with the big debate, Joe, with Aussie was, is it copper because they sell a lot to China? Is it their big mining country? Is it gold? Or is it risk? Is it S&Ps? Risk on? It seems to be the most sensitive currency to risk on, risk off. Do you see it that way?
I see Aussie? I see it not as much, I don't think, as in the euro. I find that the euro is a little bit more
risk on, risk off.
Yeah,
more responsive.
Yeah.
Okay.
Yeah. Let's see.
So I mean, everyone's pronouncing, and I could understand why, that the dollar is peaked. Okay. Is there any scenario? Let's say, for example, this rally in the S&Ps fail, and we take out, it's hard to believe it was only a week ago last Monday that we were, talking about, is it going to be a 20% correction, 30%? And there was a big hedge fund conference. Maybe you went to it in New York last week, Joe.
I did.
And all the hedgies were there. And I keep, recalling this interview where they were interviewing this woman who's a hedge fund person, and it was during that day, and it had recovered. And you know what she said? We are so all relieved. Okay, so to me that means that a lot of people think that was it, and that if this is a failing rally, and we take out those lows, we'll see how relieved she is then. I'm just saying it seems too pat that that was the low.
Well, take a look at this. This is a daily time frame, but to your point, from earlier when you were speaking in the show, when you opened the show, look at the 4-hour time frame. It's a 0.93. So for since the 31st and the beginning of this month, so this week, it's been very highly correlated with stocks.
Yeah.
Right.
So I was saying that, you know, you could have 25, 40 handles in the S&Ps happen in a heartbeat, that the Aussie actually could be a lower beta way.
Yes.
If you think this market is going to fade to be short.
Yeah. And so, yeah, there's two things there. Number one, like you just said, you can use the Aussie as a proxy, or you can use it as because you may not have access to S&Ps, right? Some people don't have access to futures currencies on their FX platform.
Right.
So you can use the Aussie as a proxy there in that case.
Okay. Any others? Okay. There
Yeah.
you go. No.
So this here was, dollar note versus the DXY. You can see that currently there's a positive correlation between the two, which makes sense if the dollar's going higher. You may see that. So a lot of people talk about dollar, CAD, and oil, right?
Yeah.
And they say that you know, if crude oil is moving higher, then dollar, CAD is moving lower. There is a strong inverse correlation. However, this shows that is not the case. If you take a look at the correlation right now,
it's no correlation.
There's no correlation at all right now on a daily time frame between dollar, CAD, and crude oil. You can see that there was in January earlier, but you know, in the last couple of weeks there hasn't, and it's actually been decreasing. So you can't use that on the daily time frame to trade.
So the trick is, I guess the trick is knowing when there's a disconnect, and if you just use this, you'll find out after making several trades, thinking it was still. I wonder how long it would take someone to realize you can't use that correlation anymore.
So what I would say is use this level, the negative 0.0 and the positive 0.80, as long as you're above or below it.
I see.
You can use it to try and see. So
I'm curious, where it turned back above 80, the rally was already underway. So maybe you had one bad trade and you can't trust it now.
Right.
Okay.
So it's like that with all your indicators, right? You know, you always have you got to find the turning points.
Right.
You know, something's overbought or oversold, you know, it might start moving back into neutral territory.
Yeah.
Here's the 240 minute just to show you. It's still on a smaller time frame, it has the same thing. And here I'm wondering, well, a lot of people talk about dollar yen, right? Look at it lately. It was up here. It was statistically relevant for a long time. Beginning 2022, you can't look at dollar yen and trade it with yields anymore, right?
Okay.
Same with the S&P 500. What about the S&P 500 now, right? So people trade dollar yen. They say one of two things. They say A, either it follows yields, or B, it follows the S&P 500 with a risk on, risk off.
Some people think it runs that it's a negative corollary to gold.
To gold? Yeah,
and that at times it is, and it certainly isn't today.
It is not today. That's something I was going to say. You are right.
Or yesterday. Yeah.
Yeah. This was supposed to be up there. What other correlations with dollar yen? So I had this.
So really,
look at gold though.
Yeah.
It's negative 0.81. So it is on the border, but it's it may increase or it may decrease. So if you're looking at dollar yen and you want to trade gold, or vice versa, if you're looking at gold, dollar yen may be a proxy, it's right on the cusp. Some people use a correlation. They look for correlations of negative 0.9 just as a buffer in between there. So it's right on the border. And the same with silver. It's also right on the border as well. So the correlation with dollar yen and precious metals may be coming into favor, but I went through, Dale. I went through and looked at dollar yen with every single instrument that I have, and every single stock that I have in my that I follow. And the only thing that I could find dollar yen correlated with right now was gold and silver, and Hang Seng, and dollar yuan, and that's it. They were actually highly correlated. I think they were negative 0.93.
Yeah, the yuan actually put in a nice bottoming formation a week or so ago.
Yeah, it did.
Yeah, so that's a change, and that means yuan weakness, right? So they're going to devalue. That I remember someone saying that was something to follow if you're a gold trader. So
it's going to be. I was just going to say it's going to be interesting this week. But they're closed this week because they have the New Year. Yeah, so when they come back, next week, we'll have to pick up that discussion.
Okay. Yeah. So some interesting things, Joe. Bitcoin. Okay. Yeah. Everyone's trying to find its identity.
Yeah. Well,
it's a chameleon.
I know. Is it risk on? Is it risk off? Is it a safe haven? Which is it?
It kind of led the way down in S&Ps, didn't it?
Look at it right now. They're highly correlated this year.
Yeah.
And if this
and what a weak rally that I've noticed. I know Blake was talking about if it gets over 40 or something, it's going to mean something. But compared to the S&P, it seems like it's participating more with risk off. But this bounce in Bitcoin compared to S&P is anemic.
Right. Yeah, it's very shallow. And as a matter of fact, overnight, just tonight, it's been in a couple $100 range, which is very tight, for Bitcoin to be trading.
Yeah, so this head and shoulders measures what? Negative 10,000?
19,666. Guess what? You know what that is? I don't have it on here, but
that was the old high at 18,000. Yeah. Around
so there. That's something to keep an eye on. I have a feeling this will drift lower.
Okay.
Just real quick, the last thing, just some trading tips. Be aware that correlations that hold on average, I don't know what that is. I mistyped. Show periods of weakness in the short term and the long term. So you have to look at different time frames. So for example, we looked at the euro versus the DXY on a 60-minute time frame and a daily time frame. And the more time frames you see it on, the better use, or the more useful that the correlation is. Consider whether one instrument or whether they're divergent. So you want to look for, if you see them divergence in between two currencies that are highly correlated, then that may mean there's a change coming ahead, right? So you want to be careful for that. And then when trading inversely correlated markets, make sure that trades don't cancel each other out. So if you're I don't know, buying the dollar index, looking for the dollar to go long, don't sell the euro dollar as well, because you can use that. Either way. You're actually doubling up on the dollar right there.
That's what you're doing. You're doubling up rather than hedging.
Right. And if you buy, then you're hedging.
Okay. Well, Joe, I made a great presentation.
Yeah.
I really appreciate you coming in, and I'll give you send you a message later, and we'll get you back here in a few months.
Here's my information if anybody wants to follow me on Twitter.
Yeah, Joe. Even though Joe had different functions when he was here, he always had a great feel for the market. Would post nice charts on LinkedIn, and he's a great technician. So glad to have you, Joe. It's good to talk to you again, buddy.
It was fun to be here. Thank you very much.
And you know, you're a special trading warrior, brother, because we were associates at one time. So, all right. Good things happen for you and your family, Joe. Those are my hopes for you. Okay. All right, buddy.
Stay safe, Dale.
All right. So that's a wrap. That's a wrap, Everett. Joe from New Jersey. That's right. And he can sing just like Bruce Springsteen. So, you know, if you're a fan, send him a note. He'll send you 8x10 glossy with his autograph. All right. So take it easy, everyone. Remember, don't just count your pips or correlations or anything else without counting your blessings. I'll see everyone tomorrow, and you could join the team in 20 minutes in the Morning Edge.
And I was gonna say, hey Dale, thank you very much, and Joe, thanks for that great presentation. I caught most of it, but I'm actually gonna go listen to the recording today. So
yeah,
All right,
good
great.
stuff.
great, yeah, great stuff, man. All right, thanks, guys.
All
Thanks for
right,
having
Blake.
me, guys.
All
Take
right,
care.
guys, and attendees and community, have a great day. Adios.
Bye-bye.